Welcome back to Structure and Signal. This is episode 2. I'm glad you made it again. And today I'll show you how to draw lines on charts. This will be something of the usual and something of mine that I consider peculiar, and I think it's an edge in the markets. Okay, so here we have the Bitcoin to the dollar chart. It's the all-time history index. So it starts in 2009 with huge candles, monthly increases of 11 times. And these, as you can see, these monthly increases don't happen often later on. Only in November 2013, it was roughly 5 times over, right? But then, as I've said, the chart looks completely different if we use the log scale, as I'm using it right now, and when we use the regular scale. Okay, do you see what's happening? Okay, so for crypto, I like to use the log scale. Just a quick recap of the first episode. Okay, let's use the log scale, even it out. And I also like to use exchange charts. For example, KuCoin or Gate.io. These are the two ones I'm using. I use Binance a lot too. Let's go to KuCoin. I have some notes here. Okay, we're gonna take care of this today. I don't need the history chart because, well, I try to focus on the current market situation. I do go back in history, but not so much. So I use this. Plus, the exchange charts give you volume, and that is a very important factor in trading. Okay, and a lot of indicators I build based on volume. So if I go to the history chart without volume, then I lose some vital insight. Okay, so today will be about lines, and let's have some space here for notes. We're going to modify this text. Bear with me. This will be bigger, and it will be black. Okay, so I'm going to have three types basically. Okay, first type, it will be horizontal lines. The second is diagonal lines. And then we're going to have Fibonacci levels, fib levels. And these are very basic. From number 2, we go into 4, and that will be channels. And they are very important, okay? So, and then here, I'll share my secret with you concerning channels. You'll see how this falls into place. Okay, so yeah. First, we're going to talk about horizontal lines, and they, in my opinion, they should come from the monthly or the yearly chart. And for crypto, we use monthly. The yearly doesn't give you much insight because crypto is young. Okay, so you can use the horizontal ray or line, and the most important places in a chart are closes. Actually, wicks are important too, but I think candle closes are more important, and it depends on what you want to do. Like here, for example, look, this is the all-time high for April 2021. We're going to take the top candle, the spinner, which was the reversal candle. We're going to take the close of it. It was the top, not the wick, but we're going to take the close and see how this compares. Okay, look. So I've made a ray stretching to the right. Now look at the support this level gives us on multiple hits. 1, 2, 3. Here is a close, right? That's 4, and here that wick. So that's 5 hits. If we move it here, how many hits do you get? Well, you get 1, you get 2, and none of these really hit. Okay, so there you go. 5 hits versus 2 hits on a close. This is not to say that it's always going to work like this. Every chart is different, so you have to look at, wicks or closes and see what fits better. Okay. Now, previous resistance becomes new support, and this is indicated here. Okay. Now, you need that. You need the high time frame horizontal lines because they are very strong levels, as you can see. You see what happened, right? Okay. Now, for the current situation, I would say starting, let's say, here in March 2024 until right now, which is September 25, we're going to zoom on this part, okay? So, one more thing. The colors that I use for lines are related directly to the frames, okay? So, I'll show you my system. Here it is. First, order of magnitude, okay? So we're gonna go from the top to bottom. For monthly, I use black and thickness 4, okay? For the weekly, I use maroon or brown, depending on how you see the color, thickness 3. For the 2-day, I would use the red, thickness 2. And for the 12-hour, I would use orange, thickness 1. And or 2, it depends really. Oh, you can change it. Okay. And for the 3-hour, which is completely like day trading related, fire starter, this would be yellow and thickness 1. So perhaps it's better to keep the 12-hour and the 2-day in similar fashion, right? But there is a difference. Okay, now let's play around and do this. Okay, so I have a monthly, which is a black line, and it comes from here. Okay, it's going to be thickness 4 on my chart. Let's go to the weekly now. Maybe two more lines coming from the monthly. Okay, so here is a ray. I'm going to use this level for the top, because if you count waves, this was 1, 2, 3. I just picked this point. Obviously, it starts here, but okay. So here, and another ray would go here. Okay. Now you have 102, 82, and 58. If we're talking about the weekly, right, like right now, this is I'm going to draw a box so you see. This is our focus area, all right? Okay, so now let's go to weekly. And as I've said, we're going to try to identify. Let me zoom out a little so we see the whole box. Okay, you see the box, right? For the weekly, we're going to try to see the closes as well, but change the color and change the thickness. So here I have it, and that's an important weekly close. It's not a monthly. So like when I go through different frames and zoom in, zoom out, you would get lost. Like you would kind of remember what the anchor points were, but if you have a system in place, you know exactly what the anchor points were. Okay, so here we're going to use this type of maroon, brownish, right? It's not red. You will see the difference between this and red. Okay. Plus you see the color here on the price tab. So that's an important weekly line. Another important weekly line would be here, I believe. You see right here. It also confirms here, right? Okay. Obviously the all-time high on the weekly right now. Which one is higher? This one. Okay, we're going to use this one. Okay. Anything else? Well, we can use this as our base for the weekly. And top of that range would be here, okay? So we're gonna have quite a few lines, and when we zoom in, some of them will just disappear because they will be out of view. But I like this setup for now. We have some levels here, right? These are not some levels I came up with on the fly. These actually come from support and resistance from tops and bottoms, okay? All right, so now let's go to the 2-day. As I've said, this will be red, thickness 2. So on the 2-day, I'm interested here in this range, the low from 52. Okay, but that low is so close to this line, I'm not going to clutter up my charts. So if you see a line that corresponds kind of like the monthly or the weekly with the 2-day, you don't need to put in any more new lines there. I like this level. Yeah, okay, I like this one. You see what's happening here? This is the start of the range on the 2-day. So it's a good example. First, I'll use the box to show you what I mean. We've entered like an exhaustion, like a distribution range here already in this part. Okay, well, it kind of extends all the way to here until there's a return and break. And actually, you can even call this the whole thing, right? But I'll go like this. The first part of it was here. Then we dipped. Oh, wait, no. Copy and paste it. Then we dipped out of the range, and then we came back. So here's your box again. You see what's happening? Okay. Now, as I've said, I like this level here because it gets kind of like retested when we try to re-enter this box. We fall out completely, and we're here for some time. And then with this huge candle, we're back into this range, and we're not even there for a long time. Just have a little rest. We dance around the weekly, as you see. The weekly holds us, and then we burst out, and we try to like see if the box can provide support. It does, so we bounce up to another level. And actually, this is log scale, so if we copy, I don't do this a lot, but if we copy those boxes, see what's happening? They provide a new range, okay? But that's just a little bonus. And it would work like that because what I'm going to show you with channels is exactly the same. You stack things. You stack boxes and you stack channels on top of each other. And taking this even further, like that could work too to a certain degree. Yeah, sometimes it does. There was a brief fake out here when we left the box. That was just purely, I think, hunting, and then a rip. That was the spring. That was the spring in Wyckoff theory. Okay. So let's not focus too much on these boxes. I just wanted to show you the rationale behind using support and resistance lines. I'll put it here, and this will be like that, okay? You see that the lines differ, and I hope this is clear. I'm going to mark another top right here. And do you see anything else on the 2-day? Well, I would say this is a good candidate for a 2-day marking. Okay. Now, let's keep going. Now the 12-hour. And I only want to see this part for the 12-hour. Okay? Now, anything here? I'll take this level, and right away I'll change it so I don't get confused. This will be orange. Thickness stays at 2. Okay, you see? So another candidate for orange is here. What else? Obviously the all-time high. And we can use this low. Okay? You could also use that low. It is close to the red line. So maybe not, but I'm looking for other. This is an interesting double top that I like to mark. You can see right away why this is important, because it's here and here. And perhaps a level that we're going to have to struggle with. Yeah, this seems like a good level that we're going to struggle with, because you see the touch points. Here, this level is important. And over here, I'm going to anchor it here, right here. Then you see failure, quick retest, many retests actually. And now the dance around these lines, okay? So finally, the 3 hour, I'm just gonna take the price from the all-time high to the current low. And this is a span of from August 14th to September 1st. That's 2 weeks roughly that I'm interested in for the 3 hour. I wouldn't do more. Okay, so let's see what we can still mark here. If anything, do you see anything? Well, I'm going to mark the low here with yellow and not thick at all. Wait, did it turn yellow? It looks green to me. Okay. It's barely visible, but it's there. You can change the colors, obviously, like you have a preference for blue, maybe. This marks the range in a way. Either here, let's see how far. Yeah, okay. So that goes all the way from here. That marks some kind of range we could create a box out of. This high right here. And the failed rally. Okay, anything else that you see? There is an important situation happening here. Yeah, okay. So see, because the price ripped out and then there were many retests, and this level seems important. I can just tell looking at the chart. Maybe from this candle right here, because almost touched, and it seems that over here the tension's going on between 117 in the 117 area. Okay, so there you have it. Now it took a bit longer than I expected, the video, I mean, because we're at 18 minutes and a half, and the video limit is 20 minutes. So I'll leave it at that, and in the next episode we'll continue with diagonal lines, channels, and Fibonacci's. We'll see how much we can cover, maybe only one of those points if I get too chatty. Now let's zoom out. You're gonna see this again. Okay, it looks a bit messy when you're like this, but you can always hide stuff, like you can hide drawings. That's all right. So I'm gonna look at the weekly, and it's a bit clearer. Now another trick I use is candles on my charts. They're transparent. Okay, so they will not block any lines behind them or any indicators like the Ichimoku or the Sarimoku that I came up with. It's cool to have like layers. So the candles, as you can see, let the lines show, and this is a really cool thing I advise you to employ on your charts as well. All right, thank you for this episode, and I'll see you soon with the next one. Take care. Structure and signal.